Hello traders, this is Dimitrios Haralampidis from Snail Trading, and in this video I'm gonna present you my technical analysis on the New Zealand dollar. On the weekly chart we see how the length of wave A compared to wave C is almost equal at this low here, and how prices have moved higher after this low, and the momentum remains supported by this rising trend line. However, after several attempts to move above the 21-week SMA, they seem to always reverse lower below that level. The previous week we had a move above that SMA, but finally prices on Friday exactly reversed to close just above it. Last week what happened was almost exactly the same. Prices moved higher again, but without making a higher high than the previous week, and they finally closed almost exactly at the level of the 21-week SMA, creating a doji candle. Dojis are candles that reflect investors' indecision, and that's the case with the New Zealand dollar at the current point. If we move on the daily chart, we can see how the previous week on Friday, after the attempt to move above this trend line, and most importantly this long-term trend line, prices reversed on Friday and closed just about the level of the 55-day SMA. During the week they attempted to move lower, but they were supported by the 144-day SMA, and after creating 4 consecutive bullish candles at the second attempt to remain above this trend line, this long-term trend line, again on Friday they declined sharply to the downside. That created almost a bearish cross with the 9-day SMA of the RSI, which remains above the neutrality area. However, the extent of the decline and the fact that it is the second consecutive Friday that prices are rejected at this trend line is concerning for the bullish scenario. However, we see that again prices remain above the other 2 SMAs, and they could provide support, and we can see a reversal and finally decisive break above this trend line. However, the continuing rejection at those levels makes us consider alternatives, and looking for alternatives on this price action, we can see only a few. The most probable alternative is that wave 4 has ended here and not here, and thus we expect a 5th wave to the downside. And if that's the case, then we have wave 1 here, wave 2, which is which has extremely deeply retraced wave 1 here. That makes it a little improbable, but after that we have a 5-wave move to the downside, and from here we can only count 3 waves to the upside, and this could mean that this is wave 1 of 3, and this is wave 2 of 3. Let's take a look at the lower time frame to see it in more detail. If this is actually wave 2, then we have a 5-wave move to the downside, and then an ABC, and from a Fibonacci retracement point of view, prices were rejected here around the 78.6% retracement, which is a normal retracement for wave 2. However, if the decline from here is not exactly decline, but the reaction here is very choppy, and if we look at the 1-hour chart, we can see that if this is the end of wave C, then we could probably count this as a wave 1 to the downside, and after that this could be a correction to the upside. But again, for this to be a wave 2 that has retraced almost again 90% of this decline, makes it a little improbable again for this to be a wave 2. On the other hand, if this is a 5-wave move to the downside, which is a little difficult to count it as such because we have those choppy waves here which cannot be counted well as an ending diagonal, then this could be a wave A, and this A, B, C for B, and this for wave C, but this move here counts best as a 3-wave move. Thus, it is difficult to count this as a completed wave, as a completed correction here. Furthermore, the decline from here seems to be also in 3 waves, which also makes it difficult for this to be the beginning of a larger decline, although not improbable. I draw a trend line here, which seems to provide support at those levels here and here and here, but there is also a scenario that this trend line can be drawn a little lower, like that here, and this wave to extend to lower levels. And if that's the case, then this move can be counted as a correction like that will finish at the resistance, at the support, excuse me, that is expected this level here at 65.50 to provide, because this level was resistance in the past here at this level, also this level, and also this level. This level here is a level that is expected to provide support. So if we draw this trend line a little lower, combined with this support, this vertical support here, somewhere in this level this correction may end, and finally we may have a rebound that will break above this long-term trend line for good. Of course, the alternative exists, the bearish alternative exists, and it is possible, but again, I see it as less probable than the bullish count, mainly due to the fact that we have those very deeply retraced wave 1s. The one is here and the other is here. So this concludes the whole analysis. Looking again at the 4-hour chart, we can see that if prices continue lower at this level, they will also find support at the 144 period SMA on the 4-hour chart that I'm showing you here, and this could be a good level for a reversal to the upside. The Friday's price action has finally managed to break below the 55 period SMA on the 4-hour chart. We had one attempt here and another here, but prices were immediately reversed higher. But during the last 4 hours of last week, trading hours of last week, we had a close below this SMA, and that puts pressure on the immediate momentum of the pair. Therefore, I believe that prices will continue to the downside at least for the beginning of the week, and my main scenario is that they will find support at this level here, and they will reverse higher, breaking above the trend line on the higher time frame. So thank you for watching, and I wish you a profitable week. Goodbye.